We upgraded the capacity, but it is going to take a few days for it to happen, which is annoying from Zoom's end. We already paid $1,000 to increase the capacity to enable everyone, but we're stuck with a capacity of 1,000. It looks like people have left and joining. So I imagine this call will max out at 1,000 and then we're stuck with that. However, there's still a load of people in here, and I imagine from all over the world. As always, I was watching the registrations and we had everywhere involved. So with regards to this, I've also made it so that the chat is off, but only visible to us. So we can see all of the things you're saying to us, but you guys can't interact with each other, simply for the reason that sometimes people come in with the wrong intentions to self-promote or cause issues just from previous experiences in previous webinars. However, if you want to speak to us in the chat, ask us any questions, we can see it, and we'll try and get back to people towards the end. The outline for today, so we know that we've given a lot of value on YouTube and we've done a lot of videos and things like that. So we didn't want this just to be another YouTube video or another case study like on our Instagram feed or etc. The things you've seen many times before. And for those of you who've never attended one of our live events, and I'm sure it's a lot of you because the last time we did it was a year ago, and I think we had maybe only 10,000 followers. So our audience has grew by double, and so I'm sure there's a lot of new faces here. So traditionally speaking, the public webinars that we did, they were not really recorded. They were supposed to be viewed live, and we always wanted to bring something different. So what we did, we've done 5-part series where we used to do every few months, where we've done advanced teaching in different concept blocks. So we've done a whole presentation on Wyckoff theory, a whole presentation on accumulation, distribution, reaccumulation, redistribution, some concepts regarding market structure. And today's presentation, what we wanted to do is give you an outlook on more of our approach and more of our philosophy when it comes to actually utilizing concepts. Meaning to say that there is schools of thought that in the whole industry, there's multiple schools of thought. So you've got Elliott Wave, you've got market maker methods, smart money concepts, indicator traders, there's a whole host. And the reason that these are considered schools of thought is because they work at times. Otherwise, nobody would use it. So in that sense, there is validity in every approach. Now, what you have to do is take a macro view on the markets and start to realize that you are incentivized to enter the market. It's like a casino. The house wants you to keep coming back. And therefore, they'll give you opportunity sets where it plays out to your Elliott Wave play, or it plays out to your smart money play, or it plays out to your head and shoulders scenario. These will play out to fulfill the confirmational bias of individuals who are trading within those parameters. However, when you zoom out and think, how is the market working?
Ask about the sound if it's probably because there's a couple of.
Can you guys hear me okay? Maybe I'll just bring the mic closer. You guys can hear me okay? All right, maybe because there's a lot of people, there might be a connection issue. So, but it looks like everyone can hear just fine. Yeah. So yeah, what I was saying was you have to look at the market and a macro view. And in the presentation, I'm going to give you the key anchors that you need to be looking at. For example, liquidity, we all know, is a key element of price action or the markets. The markets is simply a worldwide game of chess. And that's how I like to think of it. A battle between buyers and sellers. And these buyers and sellers are entering and exiting at different points. They have different approaches. But that's essentially what it is. You're seeing a digital footprint on a global scale of buyers versus sellers and their individual psychologies and approaches. Therefore, what we know that is true drivers of price indicatively becomes supply and demand. True driver of price becomes liquidity. And there's a few various others which we'll get into. So that's what I want to be the underpinnings of this presentation for you guys today. And within those underpinnings, we're going to be taking you through one single trade case study, but giving you multiple scenarios. For example, a traditional retail outlook and how it would work. And then we'll give you a traditional smart money outlook and how it would also work. And then our modified approach. So when we get to our approach, what I want to say more so is we are utilizing various schools of thoughts. We are utilizing Wyckoff theory. We are utilizing smart money concepts. We are utilizing supply and demand, price action. All of these things are coming in, but we are not subscribed to them blindly, where we just follow everything that's within those teachings. We have selected certain elements to create our own amalgamation of what we trade. So in day one, what we're going to be doing is showing you more of our side of core concepts, showing you our philosophy and approach to these things. And then tomorrow, what we're going to be doing is we're going to be bringing on our liquidity inducement theorem educators. That will be Raim and a few others. And together we'll be doing a presentation for the first time, bringing to you what is liquidity inducement theorem. And when I did a Q&A the other day on what we should present, that was hugely requested. And reason being, because we've posted a lot about it. We've shown you trade case studies. We've shown you our screenshots. We've shown you, snippets of case studies we've sent to the community, but nobody really knows what it is. And the reason for that is because it doesn't exist elsewhere. It's not an existing school of thought. It is a school of thought we have created ourselves. And tomorrow in day 2, that's where we're going to be shedding light on that for the first time. And what we're going to be focusing on in that presentation is smart money traps. I know a lot of you guys out here, compared to this time last year, where smart money was not really known, it was a very niche section. Now it's becoming very retail, very common. And I'm sure a lot of you guys in here, actually, let me know in the chat, do you trade smart money concepts? Do you utilize smart money concepts? Do you know about it? Because I'm sure there's a lot of people that do so. Yeah, so what I want you guys to understand is smart money concepts I utilize, I believe in. So does Alex, so does the educators in liquidity inducement theorem, because at times it works. But you have to realize the parameters within smart money concepts means people have their stop losses in similar areas. And therefore, stop losses equals money equals liquidity. So, if you're following that chain, market is searching for liquidity, market is searching for money, which is the driver of price. If there's stop losses present there, that will also be taken out. So you need to know when to be correctly applying smart money concepts, which is what we'll dig into a little more tomorrow with a few snippets today with our comparison between smart money concepts and what we trade. So I'm going to quickly come and share my screen. And before we begin, let me know if everything's okay, audio and everything, and we will get right started. Can you see that all okay? Voice is low. I'm going to just move it closer and hopefully that helps. Yeah, so good. Video is kind of blurry. Yeah, most likely is connection. There's a lot of people on. Yeah, we maxed out at 1K. Very bad quality.
It's getting a bit better, right? Slowly. I don't think it's on our end because our Wi-Fi is pretty good. I think it's more related to Zoom actually hosting the call.
It seems like some people is perfect, other people is blurry. We'll begin either way, as long as it's visible for people, and maybe it's a bit blurry, but you can catch the ideas we're trying to teach.
Yeah.
Okay, so as I was mentioning in the beginning, in the introduction, the key anchors. So we don't want to look at the market in terms of subsets of schools of thought or subsets of confirmations or confluences. What we need to rather be looking at is, okay, let's turn. I'm just going to enumerate these annotations.
Can I take it from there? No. Just 1 second, guys. There's always some people drawing and doing some stuff.
Just go on meeting settings and then turn it off. At the top. Does it bring the drop down?
No.
The chat off. There's always 1 or 2 troublemakers.
No worries. We'll block it and we'll continue. Oh, by the way, just because some people were asking about Wally, and I see that in the chat too. Wally just fine. He's just like home with his family. He has a personal issue, so he couldn't attend today, but he will be attending, of course, the boot camp and everything.
Okay, if you can just stop share. Okay, hopefully that's the last interruption, and then we can properly begin. You could also just have the chat box open for me.
Yeah. Yeah.
All right, guys, let's begin. Okay, so the key anchors, what I mean by key anchors is the main things we should be focusing on when we're looking at what is driving price. So the first one, oh, there we go. The first one is supply and demand. And that's a very obvious one because it's a game between buyers and sellers. Sellers want to get into the market at a premium, buyers want to get in at a discount, but it is very subjective what they consider premium and discount. But following on from that will become market structure. It's an expression of everything over here, but market structure is a key foundation. A market structure is actually fairly complicated. It's not just higher highs and higher lows because you need to layer it in not only with context of supply and demand, liquidity and intentions, but also multi-time frame, meaning that H1 could say something completely different to M5 and is doing that combination within the time frames. But yeah, supply and demand is a key anchor because we know that those are the participants and that's what they're doing. Intentions and control. Now, this is a super important one. What I mean by intentions and control is if you're looking at, for example, the notion of smart money concepts and the whole idea of a mitigation. If you don't know what it is, don't worry about it. But the idea of a mitigation is their intention to mitigate orders in drawdown, and therefore they are acting within those parameters to fulfill their objective. Now, if you have the intentions of somebody who is accumulating when it comes in the parameters of Wyckoff theory, their intentions is to ladder in multiple large orders of buys and get rid of sellers. So when it comes to intentions and control, it is like a game of chess. And it's not just simply people are buying and selling, but there's a whole phase that is involved in between, and you actually need to layer that into your analysis. And then liquidity, as I mentioned, is a super important one because at the end of the day, liquidity drives price. So that's the very significant one. Okay, just to touch briefly on what is our goals. So as WWA Trading, we have a lot of goals in place on what we would like to achieve. And with this being said, the whole way we've structured our company, our education company, is to be a holistic approach to trading, meaning to say that you can join a lot of courses that will be focusing on certain elements. For example, teaching you Elliott wave. For example, teaching you how to read candlesticks. For example, understanding Fibonacci. Our goal is a bit different to that, where we want it to be your last point to come to. It's not an Instagram course. It is a whole education company. You will see, especially tomorrow, with the changes that are coming. But needless to say, our goal is to bring people into our education company, into our ecosystem, and then that is the last place they need to be. And with everything that we have going on with regards to community calls, with regards to PDFs, we have at this point 1 year's worth of PDFs logged, and we're talking hundreds and hundreds and hundreds of case studies of trades we have taken ourselves in various scenarios. We've done a whole year worth of community calls. We've got so many things going on that Discord itself is a huge resource. So the idea being you guys come in, learn what we teach within the boot camps, and then with our aftercare and ecosystem, continue to progress. And later on, I'll speak a little bit more about that. But yeah, let's get right into the case study. So the case study today we'll be going into is GBP USD. And we're going to be giving you a bit of context and then doing a whole analysis of that. So for this portion, I'm going to pass it over to Alex, and then I'll catch you guys towards the end.
I'll do a quick switch and we'll continue. 1 second. Okay, beautiful. Just guys, for the serious people that are in the call, please don't draw in there because it's just making it a bit longer to do everything. Supposedly we'd block it, but I don't know what's going on.
Yeah, me neither. But I can see who's annotating, so I'm just going to remove them.
Yeah, I know what it is. 3 people left the call, 3 new people joined, and maybe those people were like not enabled. Okay, so basically I'm gonna continue. He's gonna be geeking out, Wakar's gonna be geeking out. Everyone that's doing like something like this, but basically I'm gonna be breaking down GBP USD daily approach. Okay, just a daily chart. So when you guys, okay, what's going on? Okay, 1 second, guys. Here it should be a chart, not the WWE astronaut. little
No.
posted. Okay.
No way.
Why is that?
All right, guys, just give us a second.
Yeah,
Just having issues.
Yes.
We're back in 1 or 2 minutes.
Yeah, because I don't know why is actually like he just removed all the pictures that we had prepared. So give us a second because it has to be something with PowerPoint. Okay, guys, we had to switch again. The computer had some issues, but now we are back into it. Okay, so as I was saying, I'm going to be breaking down, first of all, from the retail aspect in here. How is everything going to be laid out? So first of all, GBP USD daily, you guys right now can see just a clean chart, no markups, anything related of that. So in here, how would you guys read the price action, right? So when we come into the retail perspective area, okay, what we can see is that was a daily chart. Now we come into the H4. Okay, same thing all over. This is the same price action, just H4 in here. And now let's put some markups into it. Okay, so when it comes to the retail outlook, okay, you're gonna be having some daily retail confirmations. So first of all, the daily retail common confirmations. Okay, I'm gonna be showing you guys in the chart, so not like everyone does not get lost. But first of all, it has 5 common confirmations when it comes to the daily one. Okay, break and retest of the daily bullish trend line, showing a bearish bias, psychological institutional level and the quarter theory 1.4, key resistance with many rejections in the past. Okay, approximate 61.8 of the Fibonacci. Okay, that's a level that a lot of people like to trade, so it becomes a very important point on liquidity. Then the most recent daily candle had a strong bearish close, okay, what we can call bearish engulfing. Okay, in conclusion, the daily time frame is showing many bearish confluences, right? So now when it comes to the chart, you guys can see everything that we're laying out just here. Okay, so we have the break of the bullish trend line. Okay, we have the resistance level where we are tapping multiple times. Then we have the 1.4 psychological number in here, plus the 61.8, plus we have a structural BOS, right? So that will be a very good approach into it and looking for sells. Perfect. So now, when it comes to the H4 retail confirmations, we also have a different one where we have a break of bearish trend line showing bullish shift. Okay, price action has created a higher high, so the next move in the trend is to retrace and create a higher low. Okay, also a clean rejection from the resistance coming from the daily, plus a broken bearish trend line. Okay, still has not been retested. So yeah, so it's a bit clear in here. Break of the bearish trend line. We are having a rejection from a daily resistance area. Okay, the third one, higher high has been created, so now we could expect a lower high in price, and we also need to have the retesting here when it comes to price action. Okay, something like this, so we can come in here and maybe look for further price action to the upside. Of course, that will be the retail approach, right? So moving forward into it, we also can get H1 retail confirmations. Okay, we're gonna have same thing, break of the trend line, retest of the bearish trend line, break and retest of internal resistance. Okay, so I'm gonna just show you guys in the chart so it looks a bit cleaner. Okay, bullish breaks this trend line that is bullish. Now we're having that bearish price action coming in. Okay. Second, we're having a retest of the internal resistance in here. Okay. Fourth, we're having a rejection from the 61.8, and we can expect after a lower high a new lower low to be created. Okay, we're seeing those bearish pushes coming in. So now, that will be the retail outlook. Okay, as Waka was mentioning, we're gonna be breaking down the retail, now the smart money look into it, and now the wwa approach into the same sort of price action so everyone can be following it. So now when it comes to the smart money outlook, okay, most smart money traders like to focus on price action like this. Okay, this is a H4 time frame, so majority of smart money traders will be focusing on the latest price action. Okay, so this box, so maybe this smart money area, this is smart money area, this is smart money area. But when you can see already which one do you pick, right? That's one of the commonalities when people come with a smart money past into our mentorship, where they don't really know where to focus when it comes to a demand or supply area. And again, we have to put a lot of things in place, because if you're just focusing with a smart money approach, then you're going to be missing out in a lot of things that actually can give you or create a better case study. Okay, so now coming into place, that will be, of course, the focus of the majority of smart money traders. Okay, so now, why this will happen? First of all, okay, they read bullish price action after this break of structuring here. Okay, so that will be the first one. Okay, the first one is that they are seeing this breaking here of the bullish move to the upside. Perfect. Second one is they are assuming that because supply didn't hold in here, that could be maybe an FU candle in a lower time frame, and this place did not hold, we could be expecting that this was a demand area. Okay, and the third one, of course, that in here we had maybe an FU candle coming into this liquidity. So if this did not hold in the past, then we are just having bullish price action. So they're shifting their way. They're not looking anymore into a bearish place. They're not looking into a bullish price action area. So they will be looking to maybe buying here, right? So now let's have a deeper look into it. Also, let me know very quick in the chat if I'm going very quickly or the pace is okay. Oh, good. Okay, beautiful, beautiful. Because we have a lot to cover. Okay, perfect. So when it comes to smart money, I'm going to show you the H1 outlook in here. Okay, what smart money traders will see. Okay, remember the price action that I was showing you guys. Okay, where we had here a break of a structure. Okay, this was the H4 demand area. We're just going a bit lower now into H1, and we're seeing this main push in here. Supposedly this is a demand area. Now we are seeing this liquidity, okay, building up in here. So because I'm seeing higher lows and higher highs, or common higher lows and higher highs, I could be thinking that also we're building liquidity equal low. So we might have some sort of drop into this lower demand area. We also can see how that wick in here created some sort of FU candle. So we could expect that sort of play, right? So now moving it a bit forward, that will be some sort of analysis that smart money trader will do. And now let's put smart money confluences that I was already mentioned. Okay, we have an H1 uptrend with a clean high high and high low. The most recent high low will be looked as a demand level. Okay, and then we'll be refining that level to see if we had the FU candle with the equal lows that I was mentioning. Okay, plus we are having liquidity in here. So now a smart money trader building his case, building his scenario, can see already 4 to 5 confirmations in place, and they can formulate their idea. Okay, so that could be a valid prediction. Okay, with the four confirmations that we were mentioning, will be that we are creating this higher low to higher high. Okay, that could be my retracement. We're also having this demand area in here. We're having the FU candle that led to some sort of clear some liquidity in there. Now we are also creating equal lows in here. So this could be some sort of smart money prediction. Have an FU candle in here, be buying below these lows, and then creating a new higher high. Okay. So moving forward into it. Now, conclusion. Before I get into the WWA side, conclusion. Does that mean that retail trading is not going to be profitable? Does that mean that smart money is not going to be profitable? No, you can be profitable with a lot of strategies. What we try to do in WWA is try to refine things into a level that we can get a better high to risk reward and a better understanding of the price action, because that way we are not going to get lost in these smart money traps, something that we'll cover more in depth also in tomorrow in day 2. But these smart money traps, or where exactly is the liquidity, or based on the supply area, what we could expect knowing a bit more deeper market structure, for example. Okay, so all these things are going to be very important when it comes to building our whole case. Okay, so now coming into the WWA outlook, okay, we're gonna be doing the same price action, okay, the exact same price action for you guys, just breaking it down with some of our thoughts that can help you when it comes to create your trading idea. So now, first of all, okay, what do you see right now in here? Okay, remember, same price action that we're looking into. Right now, what I can see is that we tapped into a demand FU candle in here. We'll show you later also in trading view. Okay, it was a demand level.
Maybe ask them, guys. Let us know in the chat. Let's make this a little bit more interactive.
Okay, yeah.
So when you see this segment of price action on a higher time frame, what kind of things will you be looking for yourself?
Exactly.
Depending on the approach you take, if it's Fibonacci, if it's smart money, whatever it may be, what we'd be waiting for, what we'd be looking to do, or are you just going to monitor?
Okay, I'm seeing a lot of things. So
mitigation of supply. Okay, interesting approach, but now you have to know what is correct supply. And there's various ones. What else are we seeing? Wait for a BOS. Okay, so does that mean you're anticipating a buy? Because right now, if you're following structure directly, you're seeing lower lows, lower highs, lower lows, lower highs. So we're downtrending, but we've hit a demand zone. Therefore, we're area of mix. That's what I was mentioning in the beginning, where we're in a demand zone, but we are bearish. So what do we wait for? Maybe you could say, okay, let's wait for a BOS too high to buy. I like that thought. Obviously, we know the market works in impulses and retracements. But does that mean if it's too late to buy, does that mean we shouldn't sell? Ask yourself that. Daily, read some for me. Wait for a retracement. Okay, I like that thought process. You know that pro trend is sell. And right now we've had a bullish push, but if you are selling, it means you are with the overall trend. But if you know that it's changed trend and become bullish, that sell can still be anticipated as a retracement. We just don't know if that's a retracement for a bullish leg or a continuation for a bearish leg. You understand the small difference, but the sell would also then make sense.
Also, that's a very good one. Someone saying looking for IFC candles, okay, institutional funded candles. Okay, when it comes to that, that's when it comes some sort of issue, and that's why we cannot be formulating a trade case just based on a smart money perspective. Because now, why don't you pick that one? Now, why don't you pick that one? Now, why don't you pick, for example, this upper one? Why don't you pick this lower one in here? Okay, so yes, you can use that as demand or supply, but there has to be way more confluences in place to fully understand what the market is doing or where exactly are we heading.
Now, okay. I saw a pretty nice thought process, which is looking at this area, seeing that this has taken liquidity. So we know that, okay, if that's an FU candle following the notion of smart money concepts, will that need a mitigation where price is arriving? Okay, interesting thought process once again, but think a little bit more bigger picture. Liquidity sitting above, wait for a BOS, structure premium discount confirmations. Okay, we're getting a lot of things, but I like to see that nobody has really said. I saw one or two, but nobody really said Fibonacci, which is encouraging because right now this is a 99% retracement, meaning you would have taken a loss at the 61.8, 70, 80, etc. Another one is trend line. You're formulating this kind of, it's not the straightest line, but a very, very shallowly declined trend line. Okay, interesting. Let's throw this idea out there. Through the key anchors, what we told you in the beginning, we know that liquidity is a driver of price, supply and demand is a key anchor, structure is a key anchor. So now utilizing those formulas into this piece of price action, what can we start to see? I'm going to just clear these. Okay, first of all, reading from structure, we know that is bearish coming in, hitting a demand zone and had a strong reaction. So structure right now is mixed. So from a structural read, we need to wait further confirmation or look at the lower time frame. This time frame is not conclusive. Next into that, liquidity. Now, a lot of people are using the idea of smart money concepts. A lot of people are using the resistance level or a triple top, that kind of idea. Therefore, we know that there's a lot of liquidity lying in that whole area on a daily. Alex, you could just mark it out for me. Where all of that liquidity.
That's the next slide.
Okay, and then the last one, just to point out, and then the last one, we bring in supply and demand zones into it. All of this is liquidity. So before prices to do something, think of it from a position of the people controlling the market. Would they sell off from here, or would they bring price a little bit more and then sell off after taking all of that liquidity? Now you start to say, okay, well, it'll be, if they've taken all of those orders and liquidated it, those sellers in the market, when they liquidate, they become buyers. And then there's a whole exchange, and then all of those people are taken out of the market. Second to that, now looking at the relevant supply zone, well, that becomes now how do you determine supply and demand? But in the next slide, Alex is going to go into it.
Exactly. So what Waka was actually mentioning right now is we're going to be also giving you some steps today so you guys can actually follow in terms of your trading plan. Okay, so when it comes to watch the chart like this, you guys already mentioned a lot of things. So now see if these things align where the things that we're going to be mentioning in the next slides, and see if you can actually implement them on your trading checklist. Okay, so now the next one and first one, we have to identify liquidity. Okay, we have to see where is the liquidity sitting. Okay, as Waka was mentioning already, and we were doing already in the previous slide, we can see how we have a very clean trend line in here where liquidity is going to be sitting above. We can also see liquidity sitting now to the upside. This is way too clean. Think about how many people are going to be buying in here just because, again, remember, this is an H4 chart. Okay, remember, we don't formulate our trade idea just on one time frame. We have to put multiple time frames into it to know what our thought process is or how our case is building up. Because if you just focus on this time frame or just think about the amount of people that will just formulate their trading plan or they trade based on H4 time frame or based on an H1 time frame, when they see something like this, they're just going to be looking for buys and buys because they see a trending market. So there's just more liquidity sitting in here too. Okay,
let me ask these guys a few more questions. If you can just clear the annotations. Okay, so now looking a little bit further into it, if we look at this, sorry, Alex.
Yeah, okay.
If we look at a little bit in this area, so remember I mentioned this liquidity candle over here that might need a mitigation. Does that not fall into the narrative of this trend line? That liquidity is taken out. Now in this area over here, the traditional resistance level with the smart money mitigation area, we are getting price consolidation. Now, what is that doing? A key word I want you to take from today is the word enticing, because like I said in the beginning, it's like a casino. You're enticed to keep entering the market and misunderstand, hoping it's one of the few times you are correct, hoping it's another one. So in this scenario, they are going to be giving you the confidences you want to see. Remember, the people controlling the market, it's not a mystery to them how people think, how people trade. They also know what a resistance level is. They also know what a smart money candle is. They also know what liquidity or trend lines are. It is all available to them also. And that brings us into the hidden side of trading, where what about a lot of courses that are backed by brokers who are profiting from losses? Think about that as well. So a lot of the information out there is made in such a way to misguide you and also available to everyone, including the participants controlling the market. So now let's say you've started to enter sells here and then you see a push over here. Now you've seen that BOS. Now you're thinking, okay, I'm in a bullish trend. I've come from a demand zone and I've started to see a bullish push. well, now I know that I have a resistance or break, retest, continuation. Now people might start to thinking to buy. Okay, now they're buying into a supply zone, but as somebody previously said, maybe it's too high to buy. Now, once we're in the supply zone, what else is going on over here? Remember, as Alex said, you're not just utilizing one time frame, you're actually going to be investigating further. But we know that, okay, we're in a supply zone, we've taken liquidity. So now out of those anchors, we are starting to add them into place. And now we investigate further.
Exactly. So now coming into place with the next one, let me just clear all this in here. Okay. We already identify liquidity. That can be a first step into place.
Another question I want to pose to yourself. I see a lot of people saying it's taken liquidity. Are based on what time frame? Because it could have taken liquidity on M5 a long time ago on the BOS level area, on the resistance level. So how do you know which is the real area of taking liquidity, or knowing what is an FU, or knowing, for example, people saying the word inducement? I see you're seeing liquidity taken out, but how do you utilize that further?
Exactly. Now, the second step that you guys can actually go and put together is market structure. Okay. Now, as some people were mentioning, yes, we have a BOS in here where there's a shift in price. Okay. Coming from a, let me just annotate again, coming from a bearish perspective. Now we're coming into a bullish perspective. Okay. So now we have this as my new push to the upside. Okay. Now think about it. Every time we create a higher high, what we can expect? A higher low to be created. Okay. So what that means is that we might have some sort of retracement into lower levels. Okay. Is that going to happen? Let's see. Okay. We cannot be guessing out of here. Why? Because this is a H4 time frame. This is an IFC candle in here that we can maybe utilize right now as a point of interest. But remember, utilizing this point as a point of interest does not mean that the market maybe wants to melt and continue go to the downside. Might be just a point in price that price will hold for maybe 2 weeks, whatever is the amount of time, but might be taken out in the future too. Okay, so now we are just building the case based on market structure. We just created a new higher high. Potentially, again, potentially, because we're still in H4, we might be able to create some sort of retracement. This liquidity has been taken out already too, but we're still having this liquidity here. So this might be our new target. Okay. So now moving forward into the next one.
I just want to, Alex, just if you can go back, I want to address some of the points or suggestions you guys are making in the chat. So one of them, for example, it's supply is still in control. In hindsight, you can say that, but right now, say for example, this was fresh price action, you didn't know what is going to happen next. How would you know supply is still in control? Because you can see bullish signs. For example, you can see the bullish reaction, strong bullish reaction from a demand zone, and giving a bullish BOS on a higher time frame. That is clearly bullish signs. But on the seller's perspective, you put your seller's glasses on, you see that liquidity has been taken and we've hit a supply zone and we're getting lower time frame. So both characteristics are poised. Now, this is where people take losses. People don't take losses in the obvious areas. People take losses in these kind of scenarios where there's multiple things going on. That's why people are buying. That's why people are selling. That's why it's a game of chess. But you need to know further than that of what are the confluences you're seeing. You need to know, investigate deeper. So now you have to think of the logic. But first of all, the most important thing is get more information, go into the lower time frame and see. Right now, sellers could be in control, as somebody suggested, but buyers could also still be very much in control and take out this level like they took out the last level and take more liquidity. And that will be revealed in the lower time frame.
Exactly. Now, for some people were asking to us, I'm reading the chat, MS is market structure, okay? So now let's take a closer look. Okay, now we see that reaction from the H4 supply level. Now we're going into a deeper or lower time frame. Okay, now we're gonna be looking, this price action is H1 time frame. Okay, if you guys remember from the previous slides, what we were mentioning is exactly this. We're coming into a supply level makes some sort of rejection from it, or we're just falling out from there. And this was the, if you guys remember, the smart money place that people might be looking to buy. Okay, because this area has some sort of FU candle, because now we are building some liquidity in here. So there could be some sort of projection to go like that. Why? Because we are bullish, right? After the BOS. But again, we just don't focus on one time frame. We are building this whole case in a way that you guys can understand that we are looking, first of all, from a higher time frame perspective. So we know where the daily is sitting. Later on, we're looking into H4. So H4, remember, we just created a BOS, higher high. We can expect some sort of retracement. And now we're looking into H1. What is H1 saying? Okay. So now moving a bit forward, okay, we have to now identify new liquidity targets. Okay. So now, first of all, this approach is correct when it comes to the smart money traders. Okay, like this is liquidity. They reacted or they created this case correctly. The only problem is this might not hold. So how do we know all these things? Now let's move into the next slide too. Oops, clear that. Okay, so now into the next one, we have to have, okay, UIC we've used. First of all, we have to understand where is liquidity sitting. Okay, we did that in H4 and we did that in H1. Okay, now we also did H4 market structure. Now we have to do a deeper understanding of market structure in a H1 perspective. Okay, so now when it comes to H1, okay, what sort of market do we have? Remember, we have our main push in here. That's the H4 that created our new higher high, our BOS, and expecting if price action is developing to maybe come a bit lower now. Now, what is H1 saying? We have our main push and then we have the internal order flow. Okay, where now we're seeing a push in here. Now we're getting a retracement and now we're seeing a new push to the downside. Okay. So now with that in mind and with that all cleared,
I just want to address some more things. I'm reading the chat. Guys, I'm seeing a lot of people not understanding structure correctly. For example, you have to ask, I think, for example, do you use Wix or how do you count a BOS or how do you know which is the right higher high or higher low? Or do you know when it is not to consider a BOS? There's a lot of questions. One thing I want to ask you, oops. Let me comment on it. This area over here that created this push, why are we not considering that correct structure? For example, why are we waiting over here for our structural determination? When we are seeing this higher high, higher high, higher low, why are we not considering it bullish? And I'm not going to go into the Wix and these kind of things, but simply to say, structure is a key foundation up there with supply and demand, up there with liquidity, and a very imperative one to consider. So if you are to take anything away from today, it is correctly understand liquidity, correctly understand market structure, and focus on that word enticing. I'll let Alex continue.
Perfect. So now, as Wakar is mentioning, okay, we have a lot of points in structure right there, right? But you guys can see that we are focusing right now on pushing here, okay, and then the main pushing here, and then just this order flow or internal bearish order flow. So now,
actually, one more thing, Alex, because people didn't understand what I meant. For example, read it like this. If you're a smart money trader or something, or a supply and demand trader, you know that this is a demand level from a structure read as well. And now prices come in. We've started to get a reaction. We've started to get a BOS. We've started to get an internal trend building, which is bullish. Why are we not looking to buy in this area? Why are we actually positioning ourselves to prefer the sell? That's directly from structure. So spend a bit more time understanding structure to understand the questions, or you'll find the answers yourself. Remember, the answers are all there in the market.
Yeah, that's the first thing. Second thing is, like, again, as we mentioned, we are not looking at just one time frame. We are looking at different time frames to formulate the idea, to see where supply could be pushing the lower time frames further. Okay, so now when it comes into the next slide, okay, now we're going a bit lower. Okay, now we're going into M15. So now we've looked We've looked into H4, we looked into H1, and now we have to look into M15. That's the way we have to build a whole case idea. Okay, again, this is the same price action. So now what do we can see? That's the clean, nothing, no markups, anything. Let's see what we can see in the next one. Perfect. Now we have to identify intraday market structure. Okay, so when it comes to this, now what we can see is we have a push from here to the downside. We have a retracement, comes into some sort of supply. Another important thing, when you're building your trading idea, inside WWA, we like to focus on two main supply levels or two main demand levels. Okay, of course, that we share with the WWA community. But there's just two objective levels, okay, 1 and 2, sorry for putting it the other way around, okay, two supply levels that we're going to be focusing inside of a push, and two demand levels if it's bullish. Okay, in this case, we're in a bearish scenario, so we're going to be focusing in one of the supply levels. So now, moving that forward, what do we see too? We see a supply level that gets some sort of reaction, having some sort of supply in here, and now after taking out or grabbing that liquidity from a supply level comes and the market creates a new push to the downside, putting more liquidity in here. Okay, so we have a new push and we are building our intraday position. Okay, so now
can I just add a few more things? So I've been reading the chat and listening to all of your suggestions, some of them interesting, like on the right lines, others not considering things properly. So if I go to the previous slide, simply say, I've seen people saying, okay, we've seen bullish trend, we've seen a bullish break of structure, we've seen that smart money candle. Go back a bit more, one more for me. Okay, so yeah, just to consider this. Now, when we are saying, okay, we had this candle over here, which is a smart money candle demand zone kind of thing, that, oh, come on. Okay, this candle over here, and now price is tapping into this area. We know that pro trend is bullish. Yes, this one failed to make a new high right now, but is part of the internal trend of higher highs and higher lows. Another person mentioned they can see a schematic playing from Wyckoff theory where they're seeing selling climax here, secondary test here, a spring over here, a test over here, and then a push. So now they're starting to read it from that perspective. So now when you're laddering in the things we like to look at, smart money concepts, structure, and Wyckoff theory, this is what I want you really to pay attention to. Right things, right concepts, wrong application. That's what I really want you to focus on, which is why including smart money concepts, including Wyckoff theory, all of these things are where people are taking a lot of mistakes. It's not just that I found Wyckoff theory or I found smart money concepts, I have now solved the market. It's nothing like that, because you can start to see, you can build the narrative of a smart money trader and of a Wyckoff theory trader and using supply and demand. With incorrect application, you're going to take L's. Second to that, on the converse perspective of people saying, well, this is an obvious sell because we had that supply zone, we had the higher time frame trend, and now they're looking at this candle. Correct assumption on its premise, but let me play another scenario, because obviously you guys know the outcome, but can you just get rid of just in the next slide? Okay, so now that we know, for example, this, if you're a smart money trader or if you're a Fibonacci trader, I don't know what methodology you are subscribed to, but we know that we have a bullish trend forming from a demand level. And then we know that if you are looking to sell for other reasons on a higher time frame, why are you not selling from this candle, for example? Why are you not selling from this supply zone? Why are you not using different methodologies? Now, for example, when you have this BOS, why are you not seeing that as a liquidity grab? A lot of questions being presented, and it's not necessarily I'm right this time because it was a sell, so I should ignore that. Even if you were going to sell here, understand that in other scenarios, you could have a very similar picture painted, but a completely different outcome, because we're not looking at the concepts itself. We are looking at the greater picture with the anchors in place, and then your checklist of confirmations after that to actually execute.
Exactly. So now moving forward, okay, into the next slide, we're just gonna formulate what could happen. So now, okay, we identify our intraday market structure, have a supply area, nice reaction, right? So now, based on our smart money traders, our last bullish candle to the upside, we've seen a nice reaction. Now, is it time to sell? Okay, so now for a lot of people, this could be also an option. We see that amazing week to the downside, then some sort of retesting here in a smaller time frame, and then maybe some sort of internal BOS to the downside. So now, when it comes into this, again, another potential projection that I will be making if I was just focusing on smart money, okay? So if I'm focusing on smart money, what can I have this as a potential area in here, okay? So I want to point out two things. First of all, tomorrow, okay, you guys will be also having a deeper understanding of why these smart money traps happen. Okay, so that will be in the curriculum or the presentation of tomorrow. But again, you guys can see that when you fully understand certain concepts, then you can see why this could fail and why this was not the true reaction. Okay, so in this case, there's two things. One is our approach in WWA that we like to have, as we don't look smart money as exact same way. We have our own refined stuff. So now, based on our refined things, okay, this will have been not our point of interest, okay, in this level. So I'm just marking it here so you guys can see from the traditional buy to sell candle. Okay, second is going to be the smart money trap that tomorrow will be covering. Okay, so you guys will have a more deeper understanding. But I just want to point out there's two levels in here to understand. First of all, what candle are we picking in here? And second, or point of interest. And second, if this is going to be a smart money trap or not.
I just want to ask in the chat box. So if you are a smart money trader or you utilize them, and I saw a lot of comments, people saying they are, if you are looking at this now with the context of everything else that is going on, would you be looking to sell based on this context, based on you had a reaction of this? Oh, I'm not rotating. You had a this candle clearly took liquidity and hit a supply zone, gave a strong push down, gave us a break of structure level over here. So now we've had some form of bearish intent. We've had a change of character. Now we had this strong bullish push. Okay, interesting, maybe because we cleared liquidity. But now we've had this wick following the notion of a mitigation, strong reaction, internal mitigation potentially, and then the BOS. So we're seeing price start to deteriorate. So if you are looking at this, would you think, okay, this is actually following quite intelligent analysis of using your higher timeframes, building in your lower timeframe narrative, not jumping in on step one on the liquidity grab. You're not jumping in right here based on the mitigation. You're waiting for development. And I would say that's quite mature analysis, but would that be sufficient? Let me know in the chat box if this is something you would sell, or what else would you do, or would you buy potentially? I don't know. Okay, what are people saying? Sell, buy, then sell. A lot of sells. Hedge, okay, interesting.
Very interesting hedge one.
Yes, I would sell. Paying attention to sell. Nothing else but sell.
Okay. Okay, so this is exactly what happens then. Okay, then in this case, boom, you go and you take the loss. You don't really understand what happens. Okay, so again, as I mentioned, there's two things important in here: where to choose your correct POI, and the second one, understand this is my money trap that tomorrow will be covered a bit more further. So now, when it comes to our case, we don't enter in here. We just wait for the next one, and that's what we're gonna be showing you guys in here. So now, after that reaction in here, now we get a new push or this order flow coming in.
They can't see your mouse.
Oh, sorry.
You have to annotate everything.
Yeah, let me annotate so you guys can see exactly what I mean. Okay, so now again, after this, as I mentioned this before, we just took the, for example, loss in here. You guys can see it even gives some sort of reaction, okay, making people again.
Keyword enticing. Once again, giving you the reaction, giving you hope, and then strong bullish push.
Exactly.
Question
so now,
these things.
After this, look what happens. Now we go all the way around super quick. Okay, check at the momentum that we are seeing in here. After this momentum to the upside, okay, very quick. Okay, what is gonna making people on the other side is maybe look for buys in here. Okay, why? Because okay, I missed my sell. I was wrong in my analysis. Maybe I'm not bearish. I might be bullish. Okay, and then you're looking at this as equal lows, FU candle, and then a new push to the upside. So, okay, let's look for a new place in the future to be selling. Okay, so now the other way around to be looking is, now that I see that I'm in a point of interest, I see my bearish order flow. Now let's have a deeper look in this box. Okay, let's have a bit of a deeper look in the. Okay, so now what we can see in here. Okay, this is the deeper look based on 5 time frame. Okay, very important. This, if you guys can see, we did our analysis based on H4, based on H1, okay, based on an M15 perspective, understanding true liquidity, understanding market structure, not getting caught in a small money trap. And now in here, when we go to the downside, what we can see, market from here to here is creating bearish order flow out of my supply area. Okay, we are also seeing that in the future, as you guys remember, there's gonna be people trying to buy at the new place after this new bullish push. Okay, now people are thinking, okay, I made my mistake thinking this was a selling case. Now let me look for a buy. Let me look for the contrary, right? And now that's when this happens. We have a new push to the downside in a M5 time frame. Now building my whole case from a higher time frame perspective to now even my lower time frame perspective. And just even for my M5 time frame, this allowed us to have a 5 to 6 pip SL. Okay, again, I'm showing you guys the M5 time frame because we have to keep our refinements based on M1 and what happened in there. Of course, you guys can go and investigate what happened, but we keep it just for the wwa community. Okay, so just showing you guys from an M5 perspective, this whole trade that we're speaking about ended up being a 1 to 40 trade. Okay, this trade ended up being a 1 to 40. Once you make the refinement, this ended up being a 1 to 116 trade for us. Okay, so if you guys can see also, M5, it's amazing, but making also the refinement into M1 can even have a crazy return in the future. Okay, so always try to be refining, always try to be building the case from a higher time frame perspective to a lower time frame perspective. And now the most important thing later on is where I'm going to stop my trade. Okay, so before going into the next presentation, let me show you in here from a higher time frame perspective. Okay, remember, okay, all the things that we've been showing you, I'm back into my H4 time frame. Okay, so everyone can build the story again. Okay, everything that we show you, it was price action building in here. Okay, using a supply area, using understanding of BOS, understanding that after a higher high we can create a higher low. Okay, and now we can come into demand levels. So now, is this liquidity taken out already? No, we're also focusing on liquidity. Now, when the price was developing in here, our selling here, the last one based on M5 that I told you, is what we're looking forward to go until where. So if that's my push, it's gonna be to come into maybe some sort of demand levels, taking out all this liquidity. Okay, that's what happened into it. Okay, and this is the one to
just click yes. Start.
Yeah, and that's exactly what happened into our trade coming into place. Okay, the 1 to 40 if you're using a M5 time frame, or the one second, I'm gonna take out all these. Okay, the 1 to 40 if you're using the M5 time frame, or the one second. Every time we annotate, we have to go back. Okay, or the M1 giving us a 1 to 116 risk to reward.
Can I just read through some of these questions in the chat? Can I just make the box up a bit? Because I've seen a lot of interesting points, a lot of confusion of how many stop losses can we take. You know, this is really confusing. People would have been enticed or trapped into these areas. There's a lot of confusion, and that's why it's really important to understand it's not just about the concepts you use, but how you apply them correctly and knowing when to filter out the concept and when to utilize it. And therefore, that comes with a structured plan in place. Utilizing, for example, structure inlays with smart money, and then price action. Just want to look through if there's any questions. If you have any questions as well, add them into the chat, and I'll run through some of them quickly. If I'm confused, I just wait for price to play. That's a good approach. At least you're not jumping in recklessly. Would you hold full volume? Certainly not. If we're catching a 1 to 100 trade, how can you know from the outset it is going to go that far? More importantly, for example, when we are here on the higher time frame read here. So when I'm looking at this, for example, and then let's say, for argument's sake, I sold in this area. Is it sensible for me to assume it's going to go all the way down and make a new low? You have an argument there. You can say, well, pro trend was bearish. Yes, we hit a demand zone, but we cleared liquidity. And then you can say that was some sort of FU or an inducement, and then, you know, sell it. But that is not intelligent trading, because what happens if it comes lower, comes to this area over here, gives a buy reaction. Now you could have been floating 1 to 20 and then break even. that's kind of foolish. Or you let price come all the way down here to this demand level, and then you see, okay, well, I'm bearish in one perspective, and then it reacts from there. You're up 1 to 70, let's say, and then it comes all the way back to break even. You should never just blindly submit to a bias and then hold endlessly. And this is something I really emphasize in the boot camps. Your goal is not to maximize a single trade. Your goal is to maximize your portfolio, meaning to say you can have one trade that was 1 to 100 and then a bunch of losses, let's say, but that one trade gave you 100%. Okay, in that context, fair enough. But what about in the context of that trade that went to 1 to 50, you were still holding, hoping it's a 1 to 100, came back to 0. Now you lost a potential of 50%. Therefore, it's not about holding a trade indefinitely or maximizing one trade. There's a difference in risk reward and return on investment. And therefore, that's why trade management comes really important as well. And that's all based on analysis as well. Trade management is not based on arbitrary targets of risk reward parameter or a pip count parameter. You are continually monitoring to see, am I getting a shift? Am I getting a reversal? Should I hold on to the trade? It's a continual process. So with regards to that question, that's how you should be managing it.
Yeah, another important thing is like we could be speaking about all these for days. Like like the bootcamp itself is like 20 hours, and we get in depth exactly about these things. Like, for example, if you know the potential of the trade, for example, is come to this demand level, as Wakar said, you already know in your head, let's say it's a 1 to 100 potential. Okay, but now, do you have to hold blindly? No. What you have to do is understanding what we teach. There's going to be an option first, partial out, and the other option is at key levels that we teach now on demand, because if we're going to the downside, we're going to be finding demand levels. We have to now understand that if I'm not going to be partial out at key demand levels, I'll have to be at least monitoring price action to see if I can make some sort of hedge. Okay, and then cover my position. Why cover your position? Because if you know it's your position might be a 1 to 100 and you are sitting in a 1 to 10, okay, might not be worth it to partial out, but might be worth it to maybe look for a buy in a demand area that even though you take a loss, okay, let's say you're looking for a buy, you take a loss, whatever, in a hedge level, then this just continuously melting into here is going to cover by far your loss. Okay, so that's how we also get a lot in depth in that, like where exactly we're going to be hedging when a trade idea makes sense to hold. Of course, there's going to be trades that is just a 1 to 10 or 1 to 20, but for this sort of trade that has the potential to go to 1 to 100, we have to be monitoring price action accordingly.
There's a nice question. Are all supply and demand levels born equally? Or more so to say, how do you know which demand zone will work? That's what you need to understand. It's not just about knowing supply and demand. It's not just about knowing structure. It is combining them effectively, and therefore you need to have a greater understanding of rules in place. Alex, we've been going for quite a while, so let's run through the rest.
Perfect. I think we have to do the next one from there.
Was this the last slide of that? Yeah. Okay. All right, I'm going to quickly jump onto my side. Just give us a second to switch up the laptops. Just turn the camera off.
Perfect, guys. So we are back. Now Wakar is going to be sharing with you guys his screen and continue with the presentation. Also, let me know in the chat, okay, if that first breakdown was helpful for you guys to actually understand how to build more or less, of course, we cannot share everything, but more or less a proper idea and a proper understanding. This was even a retracement trade. So we also, of course, have continuation trades, hedge trades, whatever. So this particular one was a retracement trade on a higher time frame, but again, something we can capitalize on a 1 to 100. So it's very important to fully understand everything. Okay, so I can see very helpful, good breakdown, eye-opening, dope. Okay,
it's not over yet, guys. I was just switching on to my part.
Yeah, it's not over.
So actually, I would say stick around towards the end, because right at the end, I'm going to open up TradingView. And I'm going to show you so a bit of a backstory for those of you that maybe don't know. I became a dentist. I finally qualified. No intention of working, but long story, completed it for my family. And since graduation, and there was my first summer in 6 years where I had, actually time off. So I did take a bit of a break, but what I started to do was focus on one pair. And all I did for the last month, so since I graduated, was trade only GU. And today's case study is one of the trades I took on GU, but you'll start to see how I'm looking at everything on one pair, how many trading opportunities there are. Yes, there's losses along the way. Yes, there's break-evens along the way, but I'll be giving you a bit of a broad picture on that side. Typical common thoughts of...
looks like your chatting here is...
sharing the wrong side.
Just blocking something.
That must be better.
Yeah.
You just keep the chat open for me.
Yeah.
Congratulations, doctor. Thank you.
Now it's good. Now it's good.
Cool. So yeah, typical common thoughts. So when we are, publicly available, let's say, or coming to you guys in a public forum, there's quite a few things that we asked ourselves when we decided, okay, how can we be of most effectiveness? And you guys have seen that we try to run things differently, and we are very inquisitive of how the industry works, how people think, and how we can deliver best value. So with that being said, I created a list, or we've done this for months, where we just start to ask ourselves the frustrations I had, frustrations people around us have. We go into different review websites, whatever, and we look at all the frustrations people have. And typical common thoughts are becoming a professional trader. Just quickly tap across. Is wwa worth a shot? How long will it take to achieve this results? And how hard will the journey be? Now, skipping over that very quickly, this is just a small list to show you, but me, Alex, and Wally, we sat and we made a list of over 100 things, and just a brain dump on every issue people could face. And I'm sure you guys can relate to some of these. I'm sure you guys have a lot more. We tried to think of everything we could think of. For example, the first one, buying a course with lack of knowledge. Well, if you know what the course is about, for example, you know that you're only going to learn about candlestick patterns, fair enough. But there's a whole world out there of people being frustrated, and just briefly running through his list, maybe you can understand some of them. But this is what I like to call the value equation, and this is something we utilized when formulating everything that we have and how to be best serving you guys or people that are joining us. So in that sense, the formula for value we've seen is outcome at the top and likelihood of achievement. So these things are the numerator, and then the denominator is time delay and effort and sacrifice. Now let's break this down a little bit further. So dream outcome. What would be your dream outcome when joining anyone, when you're learning to trade? There might be several layers to that. Number one might be, I just want to learn a bit more about smart money concepts. I want to learn a little bit more about price action traders. I want to learn a little bit more specifically about Elliott wave theory. I want to learn more about fundamentals. That is your desired outcome from the beginning. Other people might be thinking, I just want to understand the market. Other people might say, I just want to understand how to catch higher risk reward trades. Other people might be coming in and saying, I want to be funded. That is my only objective. I want to become a funded trader and then extrapolate profit from the market. So there's various dream outcomes of people that of what they want to have, but that's something that we considered on the top. And then likelihood of achievement. Now this is very subjective, and I'm going to investigate a little bit more on what this means. But likelihood of achievement, it depends on people, and I'm going to show you a bell curve. Everything in life is a bell curve. But then coming to the lower side, time delay. Let's put the parameter of being able to catch your first 1 to 10 trade. There has to be a time delay within that. Is it going to take you 1 or 2 years, or going to take you a couple of weeks? And then effort and sacrifice. Obviously, nothing is a given. Nothing is just easy. Obviously, it requires a lot of effort and sacrifice, but how much effort do I need to put in? Now, that's something we can control, because if we give you tools, if we give you guidance, if we give you a lot of resources, that will surely help your, minimize the sacrifice and effort you need to put in, because we are easing you on your journey. Now, I'm just going to quickly skip over this. What I want to show you is the bell curve. This. Now, if we're looking at a graph and you say, okay, percentage of traders on one axis and then percentage or likelihood of success, we know that we're in an industry of majority of people losing. So percentage of traders that are not successful is very, very high. 90% of people lose. Now, we as educators or educator company, we cannot simply say, oh, you join us, you'll be profitable. That's not how the world works. There's people that are of different aptitudes. There are people of different commitment levels. There are people who are with families and full-time education or with a job, and other people who are already profitable in trading. There are so many vast conditions out there that you cannot simply say, blanket statement, this is going to help. Our job as educators is to make sure this is your last place of education, because we give you everything that we can to help you on your journey, meaning to say, we want to make this your best shot. And that's all that we can promise. Anybody promising you more than that is not, understanding this correctly. So our job is to shift the bell curve. We are trying to increase your likelihood of success by giving you the tools, by giving you the information, by giving you the application, by giving you the community, everything that we have in place, with all of that list of problems that people face, using the value equation, and then to know that we are pushing your bell curve or likelihood of success, meaning to say, we want to be your best shot. And that is our actual goal. Now, moving on a little bit more into the analysis side. Do you guys remember this from the last webinar that we did? Talking about a little about distribution. I'm sure you guys have seen it in our YouTube videos and things. Okay, this is now flipped order a little bit. Let me skip over that. Okay, yeah. So this is a whole schematic. This is also on GU. I'll come into TradingView and give you the context, but this is on a higher time frame, H4. And you know that selling section we just showed you, this was what happened right before it. So we had this whole distribution play out and a bearish market structure prevail. So what we like to do within our analysis and with the way we approach the market is looking at the higher time frame to know what is going on. So on a high time frame, we are distributing. Does that mean I'm only looking to sell? Certainly not. So you can see these circles that I have in place. Then we go into each segment on higher time frame and then buy and sell in between using our intraday plays and the various concepts we have in place for that. So we can start to see, if you follow my log on GU, that's all I've been trading. You can see it in our highlights. You can see it on my page as well. On Instagram, you start to see that you can be buying and selling within a range, and then knowing your high time frame macro view to then know when to swing or intradays into swing. That's something that we really like to do. So quickly running through, this is something we'll show all of you guys. So now it's in the next area of higher time frame, and then everything that is happening in between. Then the next one, everything that is happening in between. You start to see, you can start to play intraday plays, knowing when to enter, knowing when to exit, knowing these are short-term narratives. And then as your higher time frame is developing, knowing the context of that also. So just a quick run through. For every area of price action, every significant demand and supply level, every significant market structure point, every significant liquidity point, that is on the higher time frame. And then there's always a further investigation on the lower time frame, building your case study, building your narrative to know what to do next. And you start to see this was the resultant of my last few months, where that distribution trade at the top is the one I've been holding for a few months now. And let me just quickly annotate for you guys. You can start to see at the top, we have our distribution play, and then I was buying and selling within that range. Then the sell played out, and then I add to my sells. When demand levels come, I like to buy, but within my sell, I'm also buying, meaning to say it's more of a holistic approach. You are looking at the market all in one condition. It's not just sell and then trying to get a big monster trade or a huge risk reward, because that top entry on the UTAD of the distribution, I'm only holding 10% volume. Yes, I can say the risk reward was whatever, but it's about how I manage that position in line with stacking entries, in line with buying to hedge, in line with my intraday plays. There's a whole approach to this, meaning you have your key anchors, and then you have the layers and levels of analysis beyond that. It's not just simply subscribing to Wyckoff theory, subscribing to market structure. It's about knowing every component and then having a whole greater understanding of the market.
Yeah, and there's something to point out in that when Wakar's building the first selling up here, okay, the massive one, okay, that's what we can call, for example, a prime setup, okay, something that we know aligns with a higher time frame perspective to a lower time frame perspective. That's one sort of, it's like the case that we gave at the beginning, okay. That case that we gave, that's one trade that is building upon with H4 daily perspective, H1, M15, M5 time frame. But also, there's going to be moments where we're going to be using more the intraday perspective to hedge those positions, or to even play in that ping pong style that you guys will also see. Okay, so it's aligning certain things, but mostly understanding where am I building a high prime setup based on different time frames, and maybe where am I building more an intraday trade based on M15 and below. Okay, so when you differentiate both, you can actually know when to hold one's longer, and when you can actually stop some trades shorter, because you know your perspective was more in an intraday time frame.
Okay, just jumping. Some people are saying there's quality issues. I'm not sure what I can do, but yeah, just bear with me. Okay, moving further beyond this trade. So, okay, you guys remember this as well from the last presentation. I can see it's actually a little bit blurry. Maybe Alex, let's just turn off the camera. Or for some people, it's working fine.
Let me see if that makes a difference.
Okay, I just turn off the camera. Maybe that could help. Quality good on this side. Okay, I think it depends on the person then. Okay, so yeah, we had this whole presentation previously for you guys. It's actually a YouTube video as well on our Wyckoff theory series on YouTube. So I have a quick investigation of that. But we remember this accumulation side as well. So I just mentioned about distribution. We have the accumulation side also. And over here, I want you to check out this video that myself and Alex made. It's about all of the layers that we talk about, and this is on YouTube. So I'm just giving you guys kind of homework, but I want you guys to be very involved with everything that we have put out there, because there's a lot of things you can learn with this full case study of understanding why we were buying and selling within this range. And then when the expansion happened, then we bought. And this trade was actually a signal that we gave into the community. But meaning to say, in that distribution side on GU, I was buying and selling within the range and then sold for the expansion. Same over here, where I was buying and selling within the range. And then when it was a push up, then I bought. Okay, now let's go back into this side of things. I want to speak a little bit more about that value equation. And just so you guys can have a little bit more understanding on our thought processes when it comes to that. Just going to whiz through this. I'm also going to open up TradingView for you guys so you can get a better look at some of this analysis. Okay, remember this video. This is a video I made on UJ. And this is more going into depth into that ping pong style trading, where you can be buying and selling within a range and understanding your structure and demand and supply zone levels correctly. So again, this is quite a long video, and there was a whole host of trades. I think this was all just 1 week of price action, and I maybe got into 9 or 10 trades, all of them high risk reward, including 1 or 2 losses, maybe 1 or 2 break evens. But overall, you'll start to see that in line with the correct approach, you should be seeing the market very similarly, and then be also able to capitalize in a very similar way. But coming into our education, coming into our bootcamp, this is what we do, where we give case studies of these kind of trades, where we give teachings of this, where, for example, if I show a trade to our students, everybody's going to ask me, okay, how did you get into that? How did you do that? Now I need to exactly show them through a case study within the parameters we taught. So there's no hiding on our side that if we take a random trade, we have to actually give due justification within our teachings, within our concepts. So every trade that we show is within the parameters of what we teach. And that may be high risk reward on a swing perspective or on a buying and selling intraday perspective. In that sense, we like to cover the market in the full spectrum. Also, you can start to see that some of the videos are not working, because obviously when it came to dream outcome within that value equation, one of the main ones is becoming a funded trader. And now you have to see within the value proposition, what is your likelihood of achievement? What is the dream outcome? So the dream outcome is you want to become a funded trader. Now, what have we got in place? First of all, we have within our community over 100 funded traders with various size accounts, 200K, 100K, people that are multiple funded. For example, Hassan over here, he has multiple 100K accounts. And then another student, he wanted me to keep him private, but he did a 6-figure withdrawal without a funded account. And then he bought a new car, which is a really cool one. But meaning to say, there is a lot of people around in the community who are doing well. But remember, at the beginning, I said with regards to that bell curve, where our goal is to give you your best shot. Our goal is to give you the information, the refinements, the tools and resources, but we can never guarantee anything further than that, because it's down to you. All we can do is give you that best shot. And here's examples of people doing exactly that, where they were in your position not too long ago, and then they took that leap of faith. Just quickly reading through some. We have over 300 verified Trustpilot reviews, which are 5-star, 309. And it's of people who took the bootcamp. And I want to just give a few examples, but I would encourage all of you to do your due diligence of us, meaning take your time, spend 20-30 minutes reading through our reviews, because there's people that joined us from various backgrounds. Some people who are already profitable, some people who are very competent in smart money, other people who had been trading only retail, other people who are part of MLM schemes, people who are part of doing retail for years. Whatever background you have, we've had those people come in, and therefore we have modified and improved our bootcamp in line with all of the types of people that exist. At the bottom, you can see the ability to achieve such high risk reward and percentage is not elusive within WWA methods. In fact, it is expected. Just a little snippet there. Another one, they truly connect with the students and help you along your journey. That is our goal in terms of the aftercare, where to this point, we've done hundreds of community calls, and the community calls, for example, myself, some of the major ones that I've done will be me going through candle by candle price action for 1 month, every single candle shown, every single buy, every single sell, every single loss, every single break even trade, all shown within there, meaning to say that we are applying the concepts, but not cherry picking. When we thought of what are the common questions or concerns people have, one of them is, yes, you can show as a winning trade, but how do you know it's not cherry picked? That's why we like to show going through segments of price action. And I've done on GU this year 2 months worth. On EU, I've done another 3 months worth. On gold, I've done 2 months worth. And I've also done on UJ 1 month worth of price action, just on my bigger community calls, going through every single trade scenario and the questions the community had. On the other side, reinforcing concepts. To this point, Alex must have done over 50 community calls only on market structure to reinforce and reinstate, because it is a complicated one. On other occasions, we've done a mentorship program for 1 month where we open up daily mentorship calls for 6 hours a day between myself, Wally, and Alex. So meaning to say we've given a lot back to the community, and our goal being is to give you your best shot and make it your last place of education. And lastly to that, your resources within the community, meaning hundreds of trades and case studies that we've given, signals that we've given that you can now go back and look at, case study and PDFs, or maybe trades that we didn't take, but they fit within the parameters of prime setups. Also, you have the winning trade section where to this point, there's thousands and thousands of community trades, all high risk reward now become for you, and a position where you can start to backtest. Discord itself and the community platform is an immense resource that we could charge for on its own, but we feel it's imperative as part of your journey. So we leave that out there for you guys. Another one from Jonathan, a nice testimonial. Again, just talking about the value that is involved in there. But guys, I want you to take your time. And some people, for example, Brad over here, trading for 2 years, 6 months of various mentorships, and now 100% our last mentorship. That is exactly what our goal is, to make this your last point of education. Now, another one that I wanted to show you. Another thing I want you to check out is our student interviews. We only have a handful of them as late, but there is certain students that have thrived within the community that we brought on, and they're available on YouTube. They're quite long, 30 minutes to 1 hour, going into individual stories. For example, at the bottom, we have Trevor. Trevor became a full-time trader. He became funded with 400K, took enough capital over a 6-month period, and now is only trading his own capital and completely, full-time trader, left his job. And it goes into the interview of how he was earning 6 figures in a very good position in the US. He had a family, he had kids, and he still made it work. At the top right, we have Justin, who is an MMA fighter. He became a very good friend of mine, and how he's developed in his journey with getting investors on board and how he's dealing with that side. I want you guys to get involved with everything that we have put out there, just so you guys can start to do your due diligence on the bootcamp that we offer. And that brings me on to my last point. We do have a bootcamp coming up, which is this weekend. And every time we've done a public webinar, we like to give you guys a little bit of an exclusive. We don't ever believe in discounts because we know that the value we bring to the table and the price value proposition or differential is strongly in the value side. So what we like to do is give you a little bit more incentive to get involved. And that's something I have for you guys today. Let me just see if there's anything else I need to cover. So what is involved? So this coming weekend and then the next weekend, we have a 4-day event where we'll have a bootcamp where it's 4 days of technicals. And it's divided into various blocks, and there's major points, but as you guys got a snippet from today, there's a lot of things that we are involved with. There's a lot of school of thoughts we are subscribed to, but we are utilizing things we like from it and refining them together. We have certain applications within smart money concepts that we curated within Wyckoff theory that we only utilize in our application, in market structure that people are not reading in the same way. So just because you might be a smart money trader or you might be a Wyckoff theory trader does not necessarily mean you look at it in the same way as we do. So it's a very intense, very advanced bootcamp, which means to say that it is not for everyone. We need a basic level of education within trading. If you've had at least 6 months experience, then it's a good point. But if you're just understanding trend lines and the basic terminology, maybe it's not for you just yet. But that's why we have the free resources online available. Then after that, we have a follow-up call with you guys, where we'll just be going through Q&As, reinforce the concepts in the bootcamp that didn't make sense, going through your guys' charts and giving you live feedback only with your cohort. And then after that, you'll be added into the community. And as I mentioned, it's a whole resource within of itself, and then continue aftercare that we deliver to you guys. Our criteria, as I mentioned, is not for everyone. And one thing I want to mention is an ethos we stand by is the higher the quality of your prospect, you guys, the higher the quality of our products, meaning to say we only want high caliber people to join us, which is why we've onboarded with an interview process. Tomorrow we'll talk about with our liquidity inducement theorem, where we have a whole, you have to fill out a questionnaire, then you have to have a first interview with our team, and then a second interview with one of the educators before you are offered a place. We'll go into that more so tomorrow. But yeah, with regards to this weekend, if you would like to get involved, I'd like to give you a 48-hour webinar exclusive offer, which is we'll give you an additional 1 month of access to the educators, where we'll create separate group chats, and you have additional calls with additional conversation with us. You'll be able to ask us any questions you have with relating to the concepts of the bootcamp or chart work that you're struggling with. We'll give you a 1 month additional access on top of everything that we offer within the community, within the bootcamp. And if you would like to get involved with that, it is this weekend and next weekend. If you are interested, just DM our official Instagram page, the word offer, and our team will get back to you. Or if you would like to email support@wwa1trading.com, that's how you can get involved. Just send them a message saying the word offer. They will send you all the relevant information that you need. And this expires in 48 hours if you'd like that additional aftercare. With regards to further events, this may be our last one of the year. Because we are going through some periods of change. We are moving location to a different country. So it'll be a bit of a period where we don't want to do another bootcamp where we normally would in November. So our next one might be in January or the new year, meaning to say, if you would like to get involved, you're on the fence, do your due diligence, watch through all of our YouTube videos, go through our case studies on Instagram, watch the student interviews, go through our Trustpilot reviews, backtest some of our trades yourself, see if you're seeing them in a similar way, or if you feel there's a lot to learn. And then, you have 48 hours to make a decision where you get a little bit of an extra from us. Tomorrow's call will be a very exciting one as well, where we're going more into liquidity inducement theorem, how it came about, and some value on that front. Remember, that's the first time we are bringing it to you guys. So I'd love for you guys to get involved tomorrow also. And we might have another packed out event. And because we hit 2,500 people requesting, and the capacity is only at 1,000, but hopefully you guys can get involved tomorrow also as well.
Yeah, hopefully tomorrow Zoom allow us for you guys to join more people, because we just paid 1,000 pounds for nothing at the moment, because right now the max capacity was 1K, which was majority of the call with you guys, and we had like plus 3 or 2,000 people wanted to join. So
okay, last thing I want to touch upon is trading view. Just making it a bit more full screen for you guys. Okay, so as I was mentioning, I've only been focusing on GU as of late for the last few months, and I've been getting only opportunities within that. And as you can start to see, there's a lot of things going on, but this is all of my analysis that I've sent within the team. You can start to see this distribution that I mentioned over here is not only an opportunity to sell, which is that top trade that I'm in, and that MetaTrader screenshot that I showed you guys, the first entry within, but buying and selling within the range, multiple opportunities every single day, aligning with potentially our liquidity inducement theorem, other trades based on our core concepts with market structure, and all of the things we covered today, but multiple opportunity sets within a range. And then your key is getting into a trade where you can hold it for the expansion, holding trades long-term. There's a couple of trades in there, and then another one over here, holding it for an expansion, knowing when your key levels are, knowing when you need to potentially see a reversal. And this is what we covered for you guys today, where we had that supply zone, we had that liquidity grab breakup structure from the demand level, and then that sell that I got in. You can see that case study as well. And then all of these trades additionally, just to give you a brief overview, how many pairs do you trade, or how many pairs do you need to trade? I think this is answer enough. You only really need to understand one properly, because there is an abundance of opportunities within one pair, and enough to consume you in that sense. Okay, that's all I really wanted to cover for today. I don't want to go in too much into depth onto TradingView because that is more so for the community and community calls and PDFs. I'm just going to quickly run through any further questions you guys have. Let me know in the chat box if there's anything extra. If not, I'll catch you guys tomorrow where we'll be joined with Raim and our liquidity inducement theorem team. You will not need to book again. It will be the same registration. You'll just get a new link for tomorrow. So yeah, I'd love for you guys to attend that, and hopefully we can get the increased capacity for that. Tomorrow's one will be a little bit later. Sunday, we know people are more busy during the day with family, etc. So we try to put that a little bit more in the evening for European or UK time. But look in the registration page, you'll see what time it is, and then convert it to your time zone. How do I sign up? Just send a DM to our team on Instagram or email support@wwa1trading.com. Message them the word offer, and then they'll give you all the information you need to get involved. We also have an option where you can have a call with our team, an interview, and they can give you all the information. But I think he is fully packed out for the next week. He's doing 6 hours a day, and every single slot is taken. So unfortunately, we can't offer you that. But yeah,
send also an important thing, because I see a lot of people putting in the chat the word offer. It's not in this chat. We mean in the WWA Instagram or the email that we put in the slide in the, okay?
Okay, if there's any final questions, do let me know. Otherwise, we'll hop off. If you like any more information, just send a DM. And yeah, it starts this weekend. So I'd love for you guys to make a decision now, not be on the fence and wait until next year. Get involved now. We know that this will be your best shot. Our goal is to make it your last point to learn, where you shouldn't have to buy any further courses. You're in our ecosystem, and we have the information, the tools, the community, the resources, everything you should need to end up in a position like some of the testimonials we showed you guys, or the funded traders, or some of the interviews. Our goal obviously is to push that bell curve, and within all the considerations of that value equation we mentioned in the beginning. How many entries do you normally take? Okay, these more specific questions, I'll have to leave it for a boot camp. Otherwise, I'm going to be here for another 3 hours. See you tomorrow and see you in the boot camp. Welcome to the team. Will this presentation be posted on your YouTube channel? I'm thinking not. Maybe we'll do a similar run later on, but these are designed for you guys to be live, so that everyone can join and come together, because it's so nice. It's so cool to see people all over the world. Hundreds, would have been thousands if we were able to, coming together, united and learning together, joining us. And we are definitely honored and humbled that you have given us your time on your weekend and the love and respect you show for us. So we want to help you guys in a live forum as best we can.
Also, something very important, because a lot of people are messaging, to be very careful with the people that are messaging you guys on our names, because again, we'll never message you, any one of you guys first. Just because some people are asking for funding accounts or whatever, I don't know,
crypto things
like
there's people just making fake accounts. So if you want to know who the real us are,